Hi, friends. Welcome back to another live trading session. I'm super excited to have you here again. So, recently, a few of you reached out and asked, hey, can you show us a strategy using Fibonacci retracement? Well, guess what? Today's the day. In this session, I'm going to break down how I personally use the Fibonacci retracement tool to find smart entries and exits in the market. This tool is one of the most powerful weapons in a trader's toolbox. And once you get the hang of it, it can really help you identify potential turning points, pullbacks, and targets with precision. Whether you're trading BTC, Forex, or stocks, the Fibonacci levels can act like invisible support and resistance zones. And trust me, they work surprisingly well in live markets. So stay tuned as we dive into the charts together, set up our Fib levels, and execute trades step by step. I'll explain everything clearly as we go, so even if you're new to Fibonacci, you'll be able to follow along easily. Let's get started and make this a productive trading day. Let's go. First things first, we're going to start by selecting the Fibonacci retracement tool from the Drawing Tools section. Don't worry, this tool is super common and available on almost all trading platforms, whether you're using TradingView, MetaTrader, or any other charting software. Now, once you've selected the tool, it's time to draw the Fibonacci grid on your chart. This part is really simple. Just follow the direction of the trend. If we're working with an uptrend, place your first point, the anchor SAR, right at the beginning of the move at the swing low. Then drag it up and place the second point at the top of the trend, the swing high. And just like that, your Fibonacci levels will appear on the chart. Now, here's a little tip. While drawing, try to align the dotted trend line with the price candles as closely as possible. This helps you stay accurate and make sure the Fib levels truly reflect the strength and structure of the move. Once it's drawn correctly, you'll notice some key levels on the chart, like 0%, 50 cent, and 100%. These act as important reference points. The 50% level in particular is watched closely by traders because price tends to bounce or reverse around that zone. So this setup gives us a clean framework to plan our entries, exits, and even stop loss placements with confidence. Cool, right? Now let's move on to how we actually use these levels in live trading. All right, friends, let me quickly show you the settings I'm using so you can check it out and set it up just the same. Now, when you open the Fibonacci retracement tool settings, you'll notice that there are a lot of levels by default, like 23.6%, 38.2%, 61.8%, and so on. But for this particular strategy, I like to keep things super clean and focused. So here's what I do. I only keep 3 levels enabled, 0%, 50%, and 100%. And I disable all the other levels to avoid any distractions or unnecessary clutter on the chart. Now, you might be wondering, why just these 3 levels? Well, let me explain. In my experience, the 50% level is pure gold. In most market conditions, when the price makes a pullback or a correction, it often ends somewhere around that 50% level. From there, the price either resumes the original trend, meaning the correction is over and the trend continues, or reverses direction altogether, giving us a strong move in the opposite way. That's why I treat the 50% level as a critical zone, and I've marked it with a white line on my chart so it's easy to spot at a glance. I personally call it the average line because it often acts like a midpoint or balance line where price decides its next move. It's simple, it's effective, and it helps me make faster and more confident trading decisions. Now that our chart is set up, let's move on and see how we actually use this in live market conditions to place our trades. Now let's talk about one of the most important parts, placing the orders. This is where things start to get really interesting, so pay close attention. Whenever I'm using the Fibonacci retracement tool in live trading, there's one key thing I always watch closely, and that's the dotted trend line we drew earlier while setting up the Fib levels. Here's the trick. When I see the price moving below this trend line, especially after reaching the upper zone, close to the 100% red line, that's when I start getting ready to take action. Let me show you exactly what I mean. In this example, the price climbs up, touches or comes very close to the 100% level, and then suddenly starts dipping below the trend line. This moment is super important because it often signals that the uptrend is losing strength and a reversal could be kicking in. So right at that point, When the price crosses below the trend line, I take that as my entry signal for a sell trade. In simple terms, price near the 100% level, resistance zone, break below the trend line, confirmation of weakness. That's when I place a sell order, expecting the price to move downward from there. This method has worked really well for me in identifying early reversal signs. And because the levels are clean and simple, it helps avoid confusion, especially during fast market moves. All right, friends, now let's talk about something every trader wants to know: where to take profits. This is one of the most exciting parts, right? You've done your analysis, placed your trade. Now it's time to plan where to lock in those gains. So here's how I do it with this Fibonacci strategy. My first target, or target one, is the average line, the 50% Fibonacci level. As I mentioned earlier, I treat this as a key zone where price often reacts. So once I've entered a sell trade near the 100% red line and the price begins to drop, I watch closely as it approaches the 50% level. If price touches the 50% line, that's my first take profit zone. I usually close a portion of my position here to secure some profits. But here's the thing. I noticed that in many cases, the momentum doesn't stop there. The price often keeps moving further down. So instead of stopping at 50%, I aim bigger. Target 2 for me is the 0% level. This gives me a much better reward if the trend continues strongly in my direction. Now, about the stop loss. And this is super important for protecting your capital. For this strategy, I usually place my stop loss just above the 100% level where I entered the trade. Because if the price breaks above that level again after the entry and closes, it usually means the reversal deal didn't work out and the original uptrend might still be in play. All right, friends, now here's a little bonus tip I personally love, and it makes this strategy even more powerful. We're going to add one more Fibonacci retracement to the chart. Yep, a second one. And this is just for confirmation. First, select the Fibonacci retracement tool again from your drawing tools. Now this time, we're not using the previous swing. Instead, we're focusing on a new swing move. Place the first point at the bottom of the swing low, right here where the price started climbing up. Then drag the second point to the top of the swing high where the price made its recent peak. As always, while drawing, try to align the dotted trend line of the Fib retracement as closely as possible with the actual price candles. The more accurate it is, the better your levels will reflect real price behavior. Now, here comes the exciting part. Take a look right here on the chart. Both the average line, the 50% white line, and the dotted trend line from this second Fib retracement are now intersecting. And even more important, the price has moved below both of them. This is a very strong confirmation signal. Price broke below the trend line, showing loss of upward momentum. Price also dropped below the average line, indicating sellers are taking control. And both of those confirmations are lining up perfectly across two Fibonacci setups. This tells us that there's a high probability the price is going to continue moving downward, giving us even more confidence in our trade decision. So when I see this kind of setup, two overlapping Fib retracements confirming the same direction, I know I'm working with a solid trade idea. Pretty cool, right? Now comes the exciting part, profit booking time. Just look at this. The price has almost reached our target 2 level, and I've gone ahead and booked a profit of $334 using this very Fibonacci strategy we walked through together. Feels amazing, right? That's the beauty of trading with a proper plan. We knew our entry, we had a clear exit strategy, and we stuck to it with discipline. Now, some of you might be wondering, can we aim for even more? Maybe set a target 3? And the answer is yes. Technically, you can set a target 3. You can look for the price to go even lower beyond the 0% level. But let me share something from my personal experience that might help you. Once the price hits target 2, the 0% fib level, the risk of a reversal increases significantly. This area often acts as a strong support zone, which means buyers might step in and push the price back up. So while it might be tempting to chase that extra move, I usually stop at target 2, lock in my profits, and walk away happy. Because beyond this level, the market can change direction very quickly, and holding on too long can turn a winning trade into a risky one. In short, target 1, 50% level is safe and quick. Target 2, 0% level, is ideal and profitable. Target 3 can be risky. Trade it only if you're experienced in watching the market closely. So there you go. This is a clean, reliable strategy using the Fibonacci retracement tool, and it worked beautifully in today's session. Stick with this setup, practice spotting these confirmations, and you'll get better at riding those trend reversals with confidence. If you found this helpful, make sure to like the video to support the channel, share it with your fellow traders who are learning, and don't forget to subscribe for more live trading sessions and strategies like this. I've got plenty more to share with you. Thanks for watching, and I'll see you in the next session. Until then, trade smart and stay profitable.